Welcome back, everyone, to another episode of the EUVC Podcast, where we connect and champion the people building European venture. Today, we're sitting down with two pillars of the Italian and European tech ecosystem, Giovanni Daprà, CEO and co-founder of Moneyfarm, and Paolo Gesess, co-founding GP at United Ventures. Together, we'll unpack how Moneyfarm went from Milan to a pan-European fintech player, what it takes to build globally from Italy, and how United Ventures backed the founder shaping Europe's financial future. 0100 returns to Vienna this February with an expanded audience that now includes private wealth professionals alongside a new track focused on defense-related topics. In its 12th edition, the conference will host leading firms and thought leaders from Anthemis, the Austrian Federal Ministry of Defense, B Capital, Burgers, EIB, EIF, KfW Capital, Lennox & Co., and many others. Cannot wait to see you there.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Welcome to the podcast, guys.
Thank you.
Thank you.
So I think we should start at the beginning to make sure that everyone knows Moneyfarm. You're primarily active in Italy and the UK, but of course also somewhat across Europe, but maybe everyone doesn't know. So Giovanni, would you tell us all about Moneyfarm?
Yes, absolutely. So we are a digital wealth management. So our mission is really to make finance more simple and accessible. The perspective is that a lot of people are going to need to invest more. Most of the people will do it digitally. And we are there to create a platform that supports them not only in the execution of the trades and investment, but also in the decision making. So advice, discretionary management, so everything that you really need to fulfill the need of making your capital and your saving works harder for you. We run about £6.5 billion now. As you said, the main market is Italy and the UK. And we've been partnering with the United Ventures since almost more than 10 years now.
So Paolo, let's then ask you, what made you make the bet on Giovanni and Moneyfarm?
What Giovanni just described is Moneyfarm today, but it's not very different from the idea that they proposed to me back in 2012. Starting the company just to make finance easy for other people. So when we met the first time, we did see a strong conviction in Giovanni and Paolo, the other co-founder of Moneyfarm, of this need in the market, to create a platform where people could easily, manage the money, in a very transparent way. And I think the mission that was there in 2012, after 13 years, is confirmed. Then the company evolved and now has an offer, and then Giovanni will explain much more. But I think the core of the idea that is still there, and it was the one that convinced us to invest. The conviction that Paolo and Giovanni could make this become a big solution for a big problem.
Giovanni, let's start there. You founded off obviously in Italy. You've then moved afterwards to the UK and had that as your second market. Let's talk about first the decision to build in Italy and what it was like to first break out of Italy as well, so to say. So what would you say that's important to learn from our audience when it comes to building in Italy first or in your home market first, and then going to a big market like the UK?
Italy at that time the ecosystem was very, very young. And I think we were talking about 2012, 2013, 2011. So I think that at the time, it was effectively just Paolo and another fund in Italy, incredibly. So it was really a matter of, building up the business, but also trying to build up the ecosystem. So, but on the other side, Italy is one of the most expensive market for investment managed product. It's a huge market. It's a huge pocket of fees. So there was a huge opportunity for disruption. And being local, we have the competencies, the capability to navigate the regulation, particularly in financial services where, the regulation plays a very big role. You have to be able to understand the local nuances of the country. So starting from Italy for us was the natural choice, but we always had the view to build a pan-European business. I was living in London at the time, and I was commuting back and forth. So my view has always been we start in Italy, but because it's easier for us to start there, given the fact that we understand the market and the regulation better. But it was never the view of remain only in Italy.
And I think, Giovanni, this is the key message that we always try to transfer also to all the founders where we met. Italy is a big market, so you can really start there, but you have to have the ambition to scale, outside. And for the Italian founders, it's a sort of a very challenging kind of mindset to get, because if you're in Holland or in a smaller market, you start, or in Sweden or whatever, you start with the idea that you have a global market to address. While if you start in Italy, you can have the idea that that you have the Italian market together. And sometimes you need to understand that yes, the Italian market is big, but it's not big enough if you want to really build something strong. So you need to have this mindset that Giovanni had at the time, just to start there because it's a big market, but with the ambition to create something that can go behind the Italian barrier.
And I think, Andreas, the other point about Italy, Italy is a cheap market to start, because the reality is that the talent is cost less. So there are more infrastructure and bureaucracy to a degree, but your ability to set up and launch a product is probably easier to do that in Italy with less capital than it would be in London or definitely in the US.
I'd love to ask both of you to reflect a bit on where Italy is today, because everyone, or not everyone, there's a lot of conversation about Italy, obviously with Bending Spoons and yourselves as well, that we are seeing some great companies come out of Italy that really managed to scale and be luminaries in Europe. So I'd love to ask both of you, where do you see Italy today? How's it different from back then? What do you see moving that's really clearly signposts to everyone that things are changing?
Compared to 2012, it's a completely different ecosystem. There are much more capital than was at the time. There has been a lot of push by the government and also by investors just to put more money in the venture capital ecosystem on one side. On the other side, I think the most important things to build the ecosystem is to have success stories, to have serial entrepreneurs, to have stories that show other founders that you can do it. And so it's a virtuous circle that started, and now it's just growing and growing. So Bending Spoon is just one story, but there's other stories since the beginning that are like Music's Match, Face It, and other company that are have shown that you can start from Italy, but you can grow and become an international player. This is, I think, is beside the money. I mean, there is completely different ecosystem compared to 12 years ago, but the success story are the one that are going to change the mentality and the willingness of founders to create international companies, and we're getting there.
I think also I would say that the talent pool has changed materially. So when we started 10 years ago, the people who work in the digital ecosystem effectively were always related to 3 companies, the Dada, and there was like 4 companies that have done digital, and you have a team of maybe 150 people that kind of was part of the ecosystem. Today is different. Today you can hire a CMO which has direct-to-consumer expertise and can understand the nuances of running a product-led operation, etc., etc. It wasn't there totally 10 to 15 years ago.
And I also had there are a lot of Italian that have done experience in pan-European companies. A lot of people have worked at Google, have worked at Amazon, have worked in Berlin or in Paris. So you have those people that are coming back and they're starting companies in Italy because, as Giovanni was saying, it's a sort of a cheaper. You got the talent, but you also have the people that arrive with this international experience, which is building a more European mindset compared to the Italian one.
I'd love to now turn a bit to that decision to scale out of Italy, and thus my question is, Could you talk to the audience a bit about how do you make that decision that now is the right time? And I'd love to, like, obviously, Giovanni, you know your own story incredibly well and things have changed since. So let's start with you and talk about the decision for Moneyfarm to do so. And then after, Paolo, maybe you can go wider and say, what do we see? How do we try and help founders think about this?
So our decision was taken at the point where there was a convergence of we need more capital, we want to have a more friendly regulator, and we want to continue to move forward with the vision of being pan-European. So we kind of put the three things together. As Paolo said, one of the structural problem we have at the time in Italy was that it was very difficult for Series A, Series B capital raises at the time, something that today is slightly different. So to raise a Series A, we decided to find a UK investor who allow us to an open operation in the UK. That was pre-Brexit. So of course, the UK at that point was also a more friendly regulatory environment. You can export back into Europe. So I would say there was a contingent of things that put it together made sense. And we kind of took the opportunity to do that by the fact that the virtue of having 2-3 things that were coming together at the same time, and leverage a fundraise to effectively sustain the story of expanding international.
Paolo, maybe you can then kind of try and abstract this a bit to how you see founders thinking about it today.
I think in a startup path, there's happened something at a certain point, which is a tipping point. So the company needs to do something different from what it was doing. And just going back, it was not just a fundraising need that we need to make more money, but we definitely need that, because it happened after a couple of years, of building the product, try to test the product in the Italian market, seeing the sort of stickiness. I mean, the wealth management is definitely a stick market. So we needed to enlarge, the potentiality. And also we needed to discuss internally, between shareholders and founders and how to do it. And there was I think a very good combination of a couple of shareholders that didn't really believe it in the potentiality. So we did a buyback of those shares. We reached out to international investors. That was a sort of very important moment for Moneyfarm at that time. And I think that just as of today, we like to sit down around the board and discuss if everybody is convinced, if we need to do some different move. There's not a golden rule, but in my experience, in 25 years experience, there has always been this. I mean, there is this moment where we have to take a kind of strong decision and try to do something different. And this is the decision. If you take the right decision, then you scale. And that was that moment in 2015 or 16. 15, just right before Brexit. And so in the story of Moneyfarm, I think this happened two times. So the first time was in 2015 with this sort of shift from Italian co-investor to international co-investor, and then the second I think moment where the company did it's not a pivot, but enlarged the market was when we thought about not only the B2C proposition, but also incumbents and then let's say the B2B2C or the B2B proposition.
And Giovanni, looking to you, you're now in the UK. You've been there for 7-ish years, and you've obviously done an incredible job there. I would say your vision is to be pan-European, but you're not one of the truly big behemoths that are everywhere yet. Could you talk a bit about then how do you go about capturing the rest of Europe?
I mean, going back to the decision point, we also were in Germany, for instance. We decided to went out in Germany after COVID. So every time of a company requires kind of different framework. And I think the challenge is always to understand which one is the right framework at the right time. From 2 years ago, there has been a big push where capital became from relatively cheap to relatively very expensive. And that, I think, forced us to change the approach to scale and growth, which I think we did actually quite well, because in the end of the day, we managed to move from a loss-making business to a profitable business in 24 months in a sector which is complicated, because you have a lot of infrastructure that you need to support. So fintech in that sense is different probably from other places. But going back to the framework for decision making, that was informed by the fact that at that point in time, the best thing for us was to grow strong in our both market where we were already operating without sustaining another J curve to open a new market. Now that we are done that, because we're profitable, we're in 2 countries and we're more at scale, now is probably the time to start discussing how do we go back and thinking about expanding in other markets.
Let's double click on the going from a scaling mindset where profit loss is not a problem to what I think a lot of companies went through in this period is going back to default alive, which is definitely a better position to be building from, unless you're in one of the hyperscaler markets where money is very, very cheap. I'd love to hear, like, how did you go through this? Like, making that decision, I think to everyone, it became clear that, okay, we got to make the decision. So that was forced upon us. But how did you go through that process? What happened both inside Moneyfarm, but also, of course, in the board with you, Paolo?
Yeah, I think, listen, from my perspective, it was relatively clear. So, when you have 2022 where interest rates went up 400 basis points and, we work on the market, we manage money. So we are, of one of the things that we are lucky is that we see this every day on Bloomberg when we wakes up. So it's like we are very close to that pulse of the capital market. So for us, it was really easy to understand the signal saying you guys have to adjust. The more complicated part is actually do it. And then at that precise point, making the decision is very easy. The more complicated thing is executing on that decision. In other phases, the decision making is also difficult. That side, the decision making was relatively straightforward. But Paolo, what do you think?
I mean, at the end, is always a matter of the convention and the ability to drive that decision into executing and factor in the company, to have the right people for doing that kind of path. And so I think it's always important to have a very strong communication process inside the company, that everybody is clear that we are going in that direction and not in other direction. And I think this worked pretty well in Moneyfarm at the time.
Yeah, I don't think I fought a lot of the decision. I don't know, Paolo, what do you think? From a board perspective, did I fought a lot the decision on moving from growth to profitability?
No, wasn't. No.
Let's unveil this a little bit. And it's an interesting question, I think, because many, I think, would say the usual story about venture capital is that while the founder has all his chips in one company, for that reason, he's going to want to drive towards profitability instead of growth. And the VCs, though, they just want size. So, like, forget it. We're not creating a small profitable outcome here. We're creating something very big, or it might as well just go home. I'd love to just, and I love this discussion because it challenges the assumption that is completely incorrect, because obviously there are more nuances at play. So maybe you can just riff a bit on what I just said.
I think in the industry is pretty common to have after certain phases in building and scaling a company, to sit down with the founders and try to understand the sort of the financial need and the stress of being there, risking your job, your money, everything that you have, which is of course the personally in United Venture we try to be very close to founders, try to want them to be in the best position to run the company. And of course, if they fail to be a little bit too stressed and tight on results, then this is not going to work. So we happen and I don't want to talk specifically about Moneyfarm, but a lot of time we try to do secondary transaction just to give more liquidity to founders, or working on incentive plan that can be a little bit more real incentive without putting too much stress on that. And in other cases, I mean, maybe even change the position. So, having founders that just move from one, very operational role to a more strategic, and in order to manage this kind of process, because it's a very long run, and what is working in the first 2-3 years is not going to work in the 5th or 7 years, and in the Moneyfarm case, it's more than 10 years now. So it's definitely we need to change the way we interact and the way we believe. So I think in the early stage it's very important to very ambition and work hard. But then after you reach a sort of a dimension, then you need to change the sort of the relations and the role of founders and investors. Company needs to have more independent board member. They need to become another thing. It's not just an investor-founder relation, but it's a broader discussion and a broader ecosystem around the founder.
And I think from my perspective, I would say that the Moneyfarm cap table is a bit strange because we have industrial shareholders, we have VCs, and we have private equity. So it's really I would say a combination of perspective and view. So we never had a situation where the VC was like, yeah, you have to spend burn all your cash in 6 months because that would I think our governance would have made it impossible. I don't think also, Paolo, your attitude, to be honest, is in that camp. So in that sense, maybe
that was the first 2-3 years. Let's try to see if this is going to crack the market.
Yes.
But then when we made it, then of course we need to raise money and manage money in a different way just to grow and also
I think, Andreas, we were a bit, let's say, the blitzscaling kind of concept came a bit later than when we started the business. So that approach of building businesses was not possible for us in 2012 in Italy. That just wouldn't have worked.
Well, and it is not for much of Europe, which I think is
exactly.
why I'm
it's
very
also
married
not for
to
much of Europe.
I'm very married to the mission of writing the playbook of European venture, because for most founders, it's not attainable to run a blitzscaling strategy, as an example, both because of the go-to-market motions, but also because of the accessibility of capital, which is why I think it's so interesting to talk about this growing with discipline mindset, both from the founder perspective, but also from yours, Paolo, because it, of course, also impacts how you as a VC can manage your portfolio and go on the boards and act and what you should be putting out on Twitter to let everyone know how you invest and think. So I think that this is a very important conversation.
Yeah, I mean, we try to do investment with with people that have this kind of ambition and mindset to become international, and also we try to write down rules that are easy to understand. I mean, there should be international rules, standard rules for VC companies. And this, I think, is one of the things that in United Venture was the idea and the mission since day one when we started with Massimiliano, to build an European VC based in Milano, but with the European standards and ambition. So we try to put this sort of mentality and process in all the investment that we've done. There are not only Italian company, we do invest also outside, but the idea is to have company that wants to company and founders that want to build something. And we know that we need to go to a Series B, Series C round, and most of the time the Series B and the Series C round are led by international investor, and so the company has to be prepared for that kind of investor, and we're really happy to have all those French, UK, German, and Nordic co-investor with us in the company, in the Series B and C of our portfolio company. So this was the mission at the beginning, and I think it's still very important to maintain that kind of attitude and willingness.
We now described how you've gone through the refining profitability after the SERB era, and you described earlier, well, we grew from Italy to the UK, and now we're in the UK. We've done very well in the UK. and we're now scaling across the rest of Europe. Let's talk about, because you described it, right, that this is the next stage that you're starting to figure out how to do. So what are the questions you're asking yourself now? And maybe you can describe a little clearer to everyone, where exactly are you on this journey? You spoke about Germany before as an example.
So I think we are, at the moment we are submitting in the UK. We reach profitability in both countries. So the fundamental point for us was that to get them to have a competitive mode in both countries. In the last few years, we really focused more about product expansion. So we saw a convergence between our traditional, let's call it robo-advisory business. So the point about we manage your money, we advise on your money, to also being a fully fledged investment platform with brokerage trading and other products. So rather than country, we focus on product expansion for the last 2-3 years. This cycle, I think, is almost completed. We have completed almost the product expansion where we want to be. So now it's a point of maximizing the commercial opportunity given by the new verticals, which for us are brokerage and pension. And now I think from a growth perspective, we can start rethinking how to look at different markets. Different markets, is a very different thing from, starting 10 years ago, whereas there was not the product category. Now there is the product category. Most of the market have their own players. The playbook is probably going to be very, very different, and it probably relate to consolidation, to M&A if there is opportunities, or to identify niches where we really have a motor, we can compete compared to other existing player in different markets. And I think this is kind of the place where Moneyfarm currently is in terms of, making sure that we have completed our product expansion plan. And then at that point in time, we have to think what's next, and that could be the international expansion back on the table.
Yeah, I think this in this market, but happen is in a lot of other market like this one. I mean, there is one point that have to be consolidated. So there's going to be company that's going to buy other company, and company has to be bought by other company. So at the end of the day, the expansion right now is definitely not to start in a new country, but probably to partner with somebody, and maybe the partnership can evolve in an M&A. There could be, one by the other or vice versa. I do believe this is going to be the future, to create a pan-European platform. Spain is growing in this field. In France, there are quite a few operators. Eastern Europe, I mean, it's an interesting market in Poland. I mean, there are a lot of, let's say, opportunities, and but of course, two things. First, we needed to get to this, positive cash flow, and that is important just to be very solid. Second, Giovanni and the team have to be, focused on building the product and improving the product. And then we have some strategic, board where we try to understand if there are those, if there is the right time to get to those opportunity, or if we need to wait and maybe understand if the opportunities should be in down the road in months or maybe a couple of years. So looking at a few years from now, I'm pretty sure there's going to be Moneyfarm in more than one country with a lot of with this multi-product offering.
How do you prepare for this as a founder, Giovanni? You know that the next step of the journey is one that you have not been on before. Consolidation was not how you entered the UK. Could you talk a bit about how you as a founder grow through this?
Yeah, actually, we did a bit of consolidation. So we bought 3 companies, or let's say 2 companies and 1 book. So I started doing M&A in 2023. And again, this was opportunistic because the reality is that I understood that growth was harder for our sector in 2022 or 2023, given also by the market dynamics. And a way to unlock capital is through M&A. So in a sense, you can, if capital is scarce, M&A helps you with that because it allows you to better define the return profile. So our product expansion, we bought one of the vertical, which was a pension consolidation business in the UK with about 1 billion in asset. There was always a decision between we buy or make the new product line, and we decided to buy one. And we did it in 2022/2023, where the opportunity for buying asset was actually probably very good. So I think we have this playbook now. So we have now done, as I said, 3 transactions. So it's definitely a muscle that we've built over the last few years. And in that sense, I feel I can, if we decide to then look at the European, I can definitely execute on that.
Can you expand on that playbook? I think it's something that everyone in the audience are very interested in understanding better.
M&A is one of the things that as a startup, you really don't think of. And I think it doesn't make sense until you have a full-on product market fit and you are solid with your core business. But after that, as a scale up, I think it's a different, it's a tool, it's a lever that you have for growth. And of course, founders, we prefer organic growth by nature is better, and by all means is more rewarding. But M&A can accelerate things, and particularly in a business where scale matters, which are mostly businesses, to be honest. The ability to execute on M&A can allow us to move faster. I didn't have an M&A background, but I was always exposed to M&A also in my previous life in banking. It came, I wouldn't say naturally, but I started looking at it very, very closely when I was looking at product expansion. So again, there is always a business reason. For us was expanding the product faster and get more scale in the UK. That the question is, how do you do it? So I think that I'm very agnostic on the how. Whatever works is fine. I don't know.
I think there is a rule though, Joe, which is you need to have the right people.
Yes.
At board level, but also in the executive in the company, because running through a M&A process is something that could defocus founders of the CEO of the company to the real business. So it's important to hire and to build the team that could manage those kind of transactions, because of course then you have advisors, you have lawyers, you have a lot of other people to manage.
It's expensive. Yes,
it is expensive, and you need to have the right people to do that. So if you are a founder like Giovanni that was already exposed to the M&A and he sort of doing this type of stuff, then he's able to. If you are not, then you need to have somebody that is sort of an M&A head for this.
Yes.
Because otherwise you get lost and you lose your hands on the real business, because an M&A process, it is very intense and it takes a lot of time and a lot of brain power. So it's not. Once you've done it, then you can say, okay, we have bought this company, we have it integrated, and now we have 1 billion more. But it was like a 6 months full.
Yeah, no, and it's a lot of work. It's a lot of work. Definitely a lot of work, and definitely with the focus on your core business. So that's no doubt that you have to make sure you can
organize the company to do that, or the company and the board, at the end, because yes, they sort of two different views on how is going the business, how is going the M&A path.
You spoke about the board in this connection, Paolo. Could you talk a bit about the importance of the board, the role of the board, and specifically when you're consolidating or growing via acquisition?
Well, I think it is very important, because if you have the right people around the table, if you have independent member that can really help in looking at what is the best for the company. And this is why I was saying earlier, when you have too many board members that are expression of shareholders, then the company is a sort of stuck. So you need to have independent mindset and to help the company to do the right choices, and so don't look at the at the value of the company in that moment, but looking at the value of the potential company in 2 or 3 years after the M&A transaction. So it is very important to have a clear discussion at board level, to have the right people around the table in order to do that kind of choices and help the founder to execute the choices.
Now I have a difficult question, which is potentially hard to talk about on the podcast in this very specific case. So instead, I'll ask it more generally. But if we take as our root case, here we have Moneyfarm. You made the investment, Paolo, 12, 13 years ago, which for most VCs would mean, at least given the normal VC playbook, would mean, you're about to figure out how do we get out of this. Could you talk, Paolo, about how you as a VC actually manage, let's call it tail end processes of a portfolio, and how you do deal with a company like Moneyfarm, which is performing super well. They're on their way to the next growth stage, but you are also kind of like promised LPs that we would also liquidate our positions at some point.
By the way, can I interject 1 second, Paolo, before you start? Andreas, the way you asked the question, I think it's, this is also a very European thing. I mean, selling is not a bad thing. I mean, it's part of life. And so I don't think you should be refrain from asking the question directly, because there's nothing bad with having a fun cycle and eventually people will get their money back. We invest a lot of people for a lot of money and eventually they need to buy a house, they want the money back. It's normal, and there's nothing bad with it inherently with selling. And I think this is a bit of a European mindset, and I would say.
What I was trying to do is be respectful that it might be a topic that you don't want to discuss on the podcast.
No, but I think in general, it's part of life. And I still feel today in Europe, some people say they perceive it as something, also in Italy, they've seen something you're doing at this, you're against the company, you're selling your stake. Why? I mean, it's not the truth, not that Paolo needs to sell, but just as a principal point.
Well, let's say that, we do this job, which is also, managing a portfolio. And so it's not just one company. And so the path of one company can be somehow hit by the other company in the portfolio. So in our case, we have a very good DPI. We have done already 3 very good exits. So the fund, the portfolio doesn't really need, we don't need to do this to sell the company because we need to finish the fund.
If anyone in the audience didn't catch that exactly, what Paolo is describing here is that if you're invested by a fund that has not generated significant DPI, the fund manager will feel a stronger need to deliver returns back to the LPs. However, if the LPs are already in the money, they're going to be very happy to typically let the company.
I can tell that there was a very difficult moment in terms of liquidity in the market in 2022, 2023. So I think the most of the portfolio in other VC they went a little long, and so we saw in the market the raise of those continuation funds in order to get the liquidity, but to reinvest in the good assets. And so we were thinking about the continuation fund a couple of years ago, actually. And then I talked to all my investors, and they say, why we should? I mean, no, we don't need to to disinvest to reinvest. We just stay there and let's monetize at the right time when the company get to the right dimension. So that was a very good idea. But you see around that there's 10 years ago there was not the continuation fund concept. Now a lot of continuation fund are rising because this need of creating a little bit more liquidity for LPs, but also the willingness of stay on those companies that can create more value. And they're if I could stay in money for another 10 years, I'm sure the company is going to grow for another 10 years. But I agree with Giovanni. I mean, we have a institutional duty, to create a DPI, and so it's good for us that we already created some DPI for our investors, so we don't need to push too much to get the liquidity of it. But just going back to what we were saying earlier, the company needs the company probably will have expansion, And in order to do expansion, we need to raise more money and to create another, let's say, round or a potential deal that could be an exit for early investor and adding new investor in the company. This is something good. So we have done it in other company where we get at a certain point where the new investor came in with a different time frame in front of them and with a different pocket in the money to bring the company from 10 to 100. So we did a 1 to 10, and now they're going to bring the company to a different pace. So this is pretty natural.
Gentlemen, I am so thankful you came on the podcast today to talk about both scaling out of Italy, then scaling out of the UK, and also figuring out how to manage through SERP. I think that it's really cool that we're starting to have some clear-eyed views on what it was to manage through that process and then refining growth after a period of profitability. Thank you so much, gentlemen. 0100 returns to Vienna this February with an expanded audience that now includes private wealth professionals alongside a new track focused on defense-related topics. In its 12th edition, the conference will host leading firms and thought leaders from Anthemis, the Austrian Federal Ministry of Defense, B Capital, Burgers, EIB, EIF, KfW Capital, Lennox & Co., and many others. Cannot wait to see you there.
This was their finest hour.
Tear down this wall. It's more than just an alliance. This is a union of values.
Let's start acting.